The market has lost a little bit of direction. It's looking for another reason to move higher. We have the Fed that's pulling back some stimulus. You've got some mixed data through February. We have an indicator that shows that, as far as we're concerned, data slowed down in February. Maybe it picks up again in March. But right now, it seems like we have a pause in the data and a big jump in valuations.
A week from now, I hope we're standing here and looking at 250,000 jobs next Friday.
Yeah,
that's the number you want to watch. People are waiting for that.
Look at the consumer spending numbers that were out today. I mean, I think it's a perfect example of just how noisy the data remains, even after the impact of weather may have fallen out. Now you have the Affordable Care Act thrown in, right? You saw the fact that people are receiving increased Medicaid payments actually bumping up spending, as opposed to people actually spending more on things like clothes and appliances and that sort of thing. So the data series is still going to be really messy, and it's going to be messy into March, and it's really going to be midway through the year before we get a clear picture, a clear trajectory of where this economy is going, and before the Fed can truly make a decision about how it's going to calibrate its timeline going forward for interest.
Scott Cohen from...
Right. I think when any government globally, historically, has been interested in growing the economy, one of the things that you would do is drastically cut taxes, corporate tax, individual tax in particular, but also consumption tax. So we're doing the opposite here. We're raising tax at a time when the economy is still in a fragile state of growth, coming out of deflation, and it is a pretty risky thing to do. That said, I think the market understands this. I think understands why we're doing this. 250% debt to GDP is a good reason to do that, to increase revenues. But it is fragile. I think we will hit a recession here.
Well, actually, we have a neutral rating on Japan, but there will be no reaction on Tuesday when the sales tax kicks in.
Already in the price?
Well, it's priced in. I mean, the whole world knew about this for months. We had consumption ahead of the sales tax hike, and of course, we will see a slowdown in economic activity in the following quarter. By how much remains to be seen, but the Bank of Japan is watching, and they are absolutely ready to do more in terms of stimulus to alleviate it.
I just think this rotation that we've been watching for a little while now play out, because continues to play out. I mean, you see some pressure onto Netflix, you see it onto Amazon. Some of those, when you really look at the multiples, they definitely trade at a much higher level. Facebook had a nice rebound today, but then you look back at what's really been working. It's been big cap, whether you're talking about technology or other. Look at Caterpillar, for instance, today. Look at GE today. Very strong and actually finishing in the green. And then you look through some of the big cap techs, whether it's Microsoft or Intel. A lot of these names continue to trade very, very nicely. Right, and it's about some of these chip names. I mean, when you really look at what's been performing, Mandy, you look at Intel and the fact that ever since they announced they were getting more and more into the mobile, that's been performing. Qualcomm's been doing very well. So there are names, there's pockets, WDC, Seagate, some of these names, the old tech, big data, some of these names really do perform well, and their valuations are incredibly low still.
At Micron, the pricing is rolling over for DRAMs. This is a much-loved stock, MU.